I originally made this video on November 27th, 2022 as part of my live Sunday class and my VIP membership. I'm just now releasing it on YouTube. If you had purchased $2,000 worth of Bitcoin and $2,000 worth of Ethereum at the time that I made this video, BTC would be worth $3,445 and Ether worth $3,171. We can compare that to Stellar XLM, HBAR, Crypto.com CRO, which would be worth $2,377, $2,697, $2,147 respectively. Let me know whether or not you like this video in the comments below. Welcome to the course, everyone. This course is why Bitcoin and Ethereum are two of your best crypto investments. Let me share my screen and let's get started. So as the title suggests, you'll learn the reasons why I believe that Bitcoin and Ethereum are two of your best crypto investments. Some believe that Bitcoin and Ethereum, or especially Bitcoin, is old tech. They believe that it's inferior technologies to some of the newer blockchains that are coming out. While I'm not going to discuss any kind of technical merits of Bitcoin, we're not going to dive into the inner workings of Bitcoin, but I will teach you that Bitcoin has a place of prominence in this crypto ecosystem. And we will be discussing why I believe Bitcoin and Ethereum are two of your best crypto investments. A little bit about me. My name is David. I'm the founder of Bitfolio Academy coaching community. Bitfolio Academy is an education business. I offer courses. I provide instructional resources. I also offer private coaching. I have a master's degree from Yale University, and I have over 20 years experience working as a systems and software engineer. I've been working full-time in the blockchain industry since 2019, and I'm a certified blockchain solution architect. I'll be leading you through this class. I started my career as a teacher, but I transitioned into systems and software engineering about over 20 years ago. So this makes me one of the best people to teach you this class. I started Bitfolio.biz back in 2014. I've almost a decade of experience mining crypto, trading crypto, investing in crypto. I'm not a registered financial advisor, and I urge you to do your own research before you make any investments. But I want to share my knowledge with you. I want you to learn more about crypto, and I want to help you to reach your goals. In this class, I'll be sharing verifiable information. In other words, you don't have to take my word for any of this material that I'm presenting. You don't have to trust me. Rather, you can check my references and verify what I'm teaching. So here's the major components of this course. I'll introduce you to my investing philosophy that winners tend to keep on winning. Second, we'll discuss the first mover advantage, and we'll discuss Metcalfe's law of why networks are exponentially more valuable. Thirdly, we'll examine the spot market volumes for Bitcoin and Ethereum and discover why these two assets are the most traded crypto assets in the ecosystem. Fourth, we'll look at the futures markets and discover that how robust the futures markets are for Bitcoin and Ethereum. Fifth, we'll look at the options markets. And finally, we'll look at the market share of Bitcoin and Ethereum. And then lastly, I'll just summarize why I think these two assets are two of your best crypto investments. Who should take this class? Basically, anyone who's open-minded. There's no prerequisites. Anyone who's eager to learn can take this class. So are you ready? Let's dive in and get started. First, one of my investment principles is that winners tend to keep on winning. Peter Thiel, one of the founders of PayPal, along with Elon Musk, says that competition is for losers. Rather, he looks for dominant monopolies. When he is looking for an investment, he doesn't look for just a winner, he looks for dominant monopolies, like Apple, for example. Dominant monopolies will remain dominant. They'll remain dominant until such time as the government intervenes to break them up, until the legal system, like the courts, intervene and begin to regulate them. Here's an example of Apple. The Apple Store policy was a monopoly in the sense that they required the developers to use Apple payment systems. If they were going to use the Apple Store, they had to use Apple payment systems. And a judge decided that this was anti-capitalistic and it was illegal. And so unless this judge intervened, and in this article, if you dive down into it, it says, hey, being a winner is not illegal. And the judge said, yeah, you can be a winner, but you can't, inhibit competition. You can't, basically, the judge says that what they were doing was illegal. But save for court intervention, Apple would have continued to just dominate and use their dominant position to, continue to win. So my first principle is that winners tend to keep on winning, and we need to pick clear winners, and we need to look for these dominant monopolies. We need to look for these investments that have a large market share, who just dominate the market. The second reason why winners tend to keep on winning is the first mover advantage. The first to enter a market tends to build a competitive advantage, despite competition from even technically superior products. The first mover has established such a market share and a solid customer base that it maintains its dominance, even in the face of technically superior products. Bitcoin and Ethereum are two examples of, first movers. Bitcoin was the first successful public blockchain. It was the first out of the gate, and Ethereum was the first public blockchain to support smart contracts. The first mover advantage can be summarized as follows. Basically, the product has become the industry standard. It has brand recognition and brand loyalty. Many times there's a high cost of switching to a later entrant, and the product benefits from having the most users. It benefits from network effects. And I want to discuss network effects a little bit. Robert Metcalfe, an engineer, he helped popularize what has come to be called Metcalfe's law. And basically, the value of networks, Metcalfe's law is about the value of network effects. The law states that a telecommunications network is proportional, or the value of a telecommunications network is proportional to the square of the number of connected users in the system. In other words, the more people who participate in the network, the network becomes exponentially more valuable. Today, we can observe network effects in everyday real-world applications like social media networks. Companies like Facebook, Twitter, LinkedIn, the more people that participate in these social media sites, the more valuable the product becomes to not only the users, but to the company and to the shareholders. That's what network effects is. It's the more people that participate in the network becomes exponentially more valuable. Bitcoin and Ethereum share this first mover advantage. They are the clear winners who will likely continue to keep on winning. Let's take a look at the network effects by looking at the unique wallets on particular blockchains. First of all, Bitcoin, if we take a look at these metrics are a little bit dated, but basically they're still valid today. If we look at the 30-day unique number of users of Bitcoin, we see it's by far the leader, followed by Solana, then Binance Smart Chain, and Ethereum. If we take a look at the number of daily unique users, we see that Bitcoin is still fairly dominant. Ethereum is also dominant. Tron also has a lot of unique daily users. Solana does, and BSC also. Polygon. But you see how dominant Bitcoin and Ethereum is when it comes to the usage of the network. And the more people who participate in the network becomes exponentially more valuable. The second or the third thing I want to talk about is the trading volume. And by the way, this is a recent look at the number of users. We see that Bitcoin has grown quite a lot in terms of the network, the user network, and the number of addresses, wallet addresses used each day is around 700,000, 670,000. And it's been pretty consistent around 600, 700,000 unique addresses per day used on the blockchain network. But let's take a look at the monthly volume. If we look at the monthly volume on crypto exchanges, and this is just crypto exchanges, there's 529 centralized crypto exchanges. And currently, over the last 30 days, $609 billion of Bitcoin has been traded on CeFi crypto exchanges. And this is only followed by Ethereum at $334 billion per month over the last 30 days traded on Ethereum. So if we eliminate the stable coins of Tether and BUSD and USDC, we see how dominant Bitcoin and Ethereum is when it comes to the trading volume. If we look at the number 6 crypto, XRP, Ripple, is the third most traded crypto at $38 billion. But notice 609 billion and 334 billion dwarfs XRP, it dwarfs BNB coin, it dwarfs SOL, Solana, it dwarfs Dogecoin. So when we take a look at the spot volume, we see that Bitcoin and Ethereum dominate the crypto market. The other thing I want to take a look at is the futures market. If we look at the volume of Bitcoin futures, we see that in the month of October, $742 billion worth of Bitcoin futures was traded on the exchanges. And if we see in September, it was almost $1 trillion, $967 billion. And this is just Bitcoin alone. If we take a look at this article, and again, it's a few years old, but basically they were saying that the Bitcoin futures is at a 2-year low, but $941 billion was a 2-year low. So over the last year and a half or more, Bitcoin futures has been trading at least $900 billion. And most months it's over $1 trillion. And if we scroll down and take a look at Ethereum, we see that Ethereum traded $1 trillion of futures on August 22nd. And we see that that Ethereum futures has even overtaken Bitcoin. And that's what was, but anyway, combined, Bitcoin is almost $1 trillion and Ethereum is $1 trillion in usage. So you see that in the futures market, Bitcoin and Ethereum dominates. And we can see this by looking at CoinGlass also. And we can see that we look at the open contracts at the present time, $10 billion worth of Bitcoin is currently open interest on exchanges. And if we take a look at Ethereum, it's $5.4 billion. The next one is Dogecoin at less than $500 million, and XRP at 400 $15 million, BNB at 378 million. So we see how dominant Bitcoin and Ethereum futures are. It's $10 billion, over $5 billion compared to, $474 million. So again, in the future, not only in the spot markets, but also in the futures markets, Bitcoin and Ethereum dominate. Also, we can take a look at the options market. I'm back on the block.co website. And if we take a look at the total options market, we see $14.2 billion for Bitcoin. This is the Bitcoin option in the month of October. September, it was $13.6 billion. And then we take a look at the Ethereum options. Last month, it was $11.4 billion of Ethereum, $12 billion in September for Ethereum. So when we look at the combined 14 billion plus 11 billion, that's that's $25 billion worth of options for Bitcoin and Ethereum. Again, by far the largest options markets are Bitcoin and Ethereum. Another point that I want to share with you is the regulation. When it comes to the SEC and the CFTC, Commodities Futures Trading Commission, the CFTC chairman has said that the only two cryptos that are commodities are Bitcoin and Ethereum. And so it says, this article says he reiterated his belief that the two largest cryptocurrencies, Bitcoin and Ethereum, are commodities. Now, Gary Gensler, the chairman of the SEC, has raised questions whether Ethereum should fall under the SEC jurisdiction as a security. Basically, it shifted from proof of work to proof of stake consensus mechanism, and therefore maybe that makes it a commodity. The previous SEC chairmen have said that Ethereum was a commodity, and the CFTC chairman says that Ethereum is a commodity, regardless of the switch. It's sufficiently decentralized that it is a commodity. But anyway, the point that I want to make here is that Bitcoin and Ethereum are the only well-established commodities, and according to the SEC, all the rest are securities and subject to security laws and the oversight of the SEC. But Bitcoin is the most mature market in crypto. It has the most liquidity in the spot market, the futures markets, the options market. Ethereum is the second most mature market for crypto, and it has the most liquidity, the second most liquidity in the spot market, the futures market, the options market. The last thing I want to share with you is the overall market share. So if we look at coinmarketcap.com, we see that there's 21,865 crypto assets that they track, 529 exchanges with a total market cap of $842 billion. I'm recording this on November 27th, so that's as of today. If we take a look at Bitcoin, the market cap of Bitcoin alone is 318 billion. So it's 40% of the total market cap of the entire crypto market. And this is followed by Ethereum at $148 billion of market cap. So if we combine these two, 40% and roughly 20%, it's roughly 60% of the total market is just in these two coins. So these are the market share of Bitcoin and Ethereum comprise almost 60% of the total crypto market. That's basically the reasons why I believe that Bitcoin and Ethereum are two of your best crypto investments. It's because of liquidity, and it's because of market share dominance. It's because of the size of the networks. One other thing we can take a look at is DeFi Llama in terms of this is what's on DeFi. Notice that Ethereum has 57% of the market share of DeFi. And this is only followed by 13% BSC and 10% Tron network, 2.5% Polygon. So we see how dominant Ethereum is in the DeFi space. Basically, Bitcoin and Ethereum are the two most dominant cryptocurrencies. And I believe that winners are going to keep on winning. And that's the reason why that Bitcoin and Ethereum they're the clear winners today, and they're probably going to remain the winners in the foreseeable future. So don't let anybody tell you that Bitcoin is old tech and there's other investments that are better. It's still a very dominant cryptocurrency asset, and it'll probably continue to be a dominant crypto asset again in the foreseeable future. That's all I wanted to share with you. Thanks for joining me for this Sunday class. It's the first of many, I hope. All the best.